What I want to do is talk about the U.S. economy. I'm not going to talk about the subject today, as I'm going to do an update on the U.S. economy. And what I want to focus on is whether or not we think you might go into a recession. I think it's on everyone's minds. And the message I want to give is that the U.S. economy is still very strong, but there are headwinds, and I want to talk about those headwinds. So let's see why I think the U.S. economy is relatively strong. I'm going to go through all these series. These are data series that I look at. I'm going to go through them impressionistically or fast, but to convince you that in total, we have a lot of strength in the U.S. economy. So let's start. Let's look at first real GDP growth. The levels that we have right now are consistent with the levels we had before the pandemic. You can see the negatives during that period in 2020. For inflation, we peaked at 9.1 back in 2022, but now these are 12-month% changes. We're at 2.8%. Now, I know inflation is on everyone's mind because prices are still high. The fact that the rate of change has fallen doesn't mean that you're not paying a lot for eggs or for other goods. Payroll employment. This is the monthly change in the number of people working on payrolls in the United States, what we call wage and salary workers. And that monthly change at 151, 125, 323, all these recent months are showing strength. It does vary quite a bit. We're not negative. And a 150 is considered an okay month. 250 is considered a very strong month. Wall Street looks at this very closely. Initial claims for unemployment insurance. If things were starting to take a downturn, you would expect that weekly initial claims for UI would start going up. They've been relatively stable. Unemployment rates. Unemployment rates are relatively low. There's been a little bit of just a modest increase, but we're at a very low level for the unemployment rate. In some ways, some economists would always say, if we're too low with the unemployment rate, it could create inflationary concerns. But as you saw, inflation is well behaved. What we're producing, the industrial production index, that's been rising. Retail sales. All right, there was a little gap between December and January, and then it came back up. But these changes, it's relatively stable in terms of retail sales, the strength of the consumer. And the consumer expenditures are 2/3 of GDP. So this is a very important statistic to look at. New privately owned housing starts showed strength in February. Permits are also showing strength. There's a weekly economic index. It's an index of a lot of different indicators, but that's relatively stable as well. So, I promise I'd be fast. Headwinds. What are the things that we're all concerned about? What's going on that's giving us pause? Well, I'm not going to read all these, but tariffs are generally causing concern in the sense that there's a lot of back and forth with tariffs, so that creates uncertainty. It's also the level of tariffs may cause inflation. We haven't seen the impact yet, and we haven't had tariffs in for long enough. Now, the thing I want to point out is that tariffs are not new. We've had tariffs for a long time. What we're talking about are changes at the margin in terms of the level and in terms of the countries that are being affected. But that is causing what I would call a headwind, a concern. Consumer confidence. This came out yesterday. And the consumer confidence is the lowest since 2021. It's lower than that low that we had back in 2022. It was a fairly steep dive. It has declined 4 months in a row. Consumer expectations for the future fell to a 12-year low in March. So consumers are concerned about some of these headwinds. And it's also well below the threshold of 80 that has been used by the conference board. They put out this number as a signal of a recession coming ahead. Consumers' perceived likelihood, this is also from the conference board, likelihood of a U.S. recession over the next 12 months actually has been rising, but it held steady in March. One of the things about uncertainty is you often have different kinds of things happening in terms of some things are going up, some things are holding steady, some things are going down. Our University of Michigan, they have a survey of consumer sentiment, and that index has been declining steadily from March of 2024. Stock market, which is also one of what we think of as a leading economic indicator, has fallen quite a bit, as we know, especially as you'll see on March 11th. Every 3 months, the Fed has a meeting to determine what they're going to do with the federal funds rate. And that determines the course of interest rates for consumer and commercial loans. When they make the decision, has a big impact on markets. And one of the things that they did during the inflationary period is they had a rise in federal funds rates. It has been coming down. But the issue right now is, with uncertainty, are they going to keep those rates level or are they going to decline? Now, Chairman Powell has said he expects 2 rate cuts between now and the end of the year. But in this last meeting that they just had, they held him steady. What I found interesting is in the transcript of his remarks, back in December, he mentioned the word uncertainty once. This is like a page and a half set of remarks. In the most recent one, he had six uses of the term uncertain in his formal transmission. We took a look at what you might think of as Google Trends on certain terms, and they all peaked on March 11th, whether we're looking at inflation, recession, or S&P 500. In terms of and 100 just means that's the peak day. If there's 50, it means it's half as much. And it turns out March 11th was when the Dow Jones Industrial Average fell over almost 500 points in that one day. So just to remind you, we've talked about this before, a recession is not necessarily just 2 months of declining real GDP. It is an overall decline in economic activity. It is declared by the National Bureau of Economic Research, which is a private institution, a nonprofit, and they're independent of the government. So the government does not declare when we're in a recession. It is often the case that GDP does decline for several quarters during recession. But in 2000, 2001, we had a recession without declining real GDP. They look at a lot of different factors. And one of the things that they look at very closely is the leading economic index. It is an index of many economic series that decline usually before a recession starts. So take a look at that gray bar in 2007 to 9. That's the Great Recession. Look at how much the leading economic indicators started declining before we even got into the recession. So the fact that it's declining now does not mean we're in a recession, but it certainly could presage the occurrence of a recession. Atlanta has a nowcast. They take every time a release comes out, they update their nowcast. We don't know what the first quarter real GDP growth rate is going to be, but they project right now it's going to be a negative 2.4%. And there were certain series that came out that contributed to that. Trade deficit was a big one, as well as retail sales not growing as fast as it has been. But that's a pretty bleak forecast. And you can see here that you can see how it changes as we release other series. The New York Fed has a nowcast, and they're at 2.7%. So again, uncertainty is creating a variety of different predictions. And housing starts and industrial production have contributed very positively to the New York Fed's forecast. But they don't weight, apparently, the trade deficit as high as the Atlanta Fed does. And then finally, the University of Michigan, this is the research seminar in quantitative economics, they come out with a national and a Michigan forecast 4 times a year. They just came out with one a couple weeks ago. I actually interviewed Gabe Ehrlich and Danielle Mennicott, and that will be on our website in probably the next week or so. But I interviewed them on this particular forecast. And their forecast is basically a slowdown of GDP, but not a recession. They're looking at it as 2.3 and 2.1 in 2025 and 2026. So what's the message? Right now, the economy is strong. The consumer is very worried. And I think a consumer-led recession is very different than a financial recession like we had in 2007 and 2009. If the consumer retracts, it may, in fact, cause perhaps a briefer recession. But if wages continue to be strong, if unemployment continues to be low, then I think there is a chance that we're not going to have a recession as RSQE projects over the next 2 years. The other factor to consider is that, except for the pandemic, the recovery that we started in 2010 has been going on for a very long time. So there is a natural ebb and flow in terms of business cycles. So there's press here, so I'm not going to make a prediction. But I think there are ingredients to say that we could have a mild recession, but I would not be surprised to find out if we did at all.